Hello, everyone. My name is Lingyi Kong. I'm working in London as an executive search consultant within the financial market across Europe and Asia. And I'm really happy to be able to participate in this event and talk about the recruitment situations within fintech industry across China. I would like to share a bit more idea with you and hopefully can be helpful for any business expansions towards Chinese markets in the long run. Okay, let's start with this. Okay, I'm going to talk about from my personal experience and across the market, give everybody a little idea about my client coverage, and hopefully that can give you a little bit perspective on how to set up a business, what to consider in terms of introducing businesses into the Chinese domestic market. And I would like to share some ideas about my experience in terms of hiring local talents towards the company, and thinking about the elements or the factors that you need to think of when you're actually setting up businesses in domestic Chinese markets. Okay, so my clients are mainly originated or started from PE or VC, the private capital side of the market, the financial services market. A lot of investors are heavily expanding their investment scopes across Chinese markets, either domestically or overseas. So the clients I work with originally are pretty much cross-border funds or pure European PE VC funds who have investment attentions draw on Chinese markets, mainly are on the tech space. And we got involved into fundraising of hirings, investor hirings, and also on the portfolio management hirings. So a lot of portfolio companies they invested into from a technology space, industrial space that would we would basically jump in and help out and see if we can help them find local leaderships. So that's how we get introduced over to the Chinese market. And I'm, from my personal background, I'm Chinese myself, born in Beijing, and studied finance. So I have naturally built my network across the financial market in the domestic market quite easily. So that's how we get introduced for the past 5 years. And the hiring generally are basically with the purpose of helping our investors and their portfolio company leaders to find the best talents based on their business model, trying to allocate the best talents to bring strategy solutions, development solutions within the platform. It can be quite different. We're going to talk about that in detail. And there's also some other elements we need to think about, especially for creative startups as well. So let's go into a bit in detail. A couple examples of my clients. On the VC, well, most of the startup, I have to say that in the earlier stage, seeding stage, pre-A, it was B, is what we are looking into mainly across the Chinese market. And most of the deals actually I looked into are pretty much focusing on post-investment portfolio companies within Chinese markets. And there are a few funds that also work with in the market, but we talk about investment strategies and how they view businesses in the technology space as well. Some examples here that I listed is there are domestic VC fund, from China. We have clients based in Beijing, based in Shanghai, and they normally would invest into tech-enabled businesses across the market. Most of the funds we work with are dollar or dollar plus RMB funds, and the way that they invest into the market is on different purpose. Some of the startups can be cultivated into a pre-IPO stage, or some of the businesses is just purely for revenue generating, and they're seeking for exiting. Most of the funds will do that, and so the but the majority of my clients are based in London who actually have attention towards Chinese market are pretty much on the fintech space. They are, for example, like I listed here, there's a top tier fintech VCP fund based in London, who actually invest into a couple projects across Asia and emerging market, and China is one of the leading market they aim at for a lot of 2B businesses, 2B technology, insurtech, and health tech backed industries, and similar with some smaller funds as well. You know, they would have a very specialized healthcare data, or very specialized certain type of technology, or serve a certain type of industry within Chinese market that they have to be fairly constrained in data protections and other things, or they have to find a way to work with Chinese markets domestically to be able to survive, or finding their market shares domestically as well. So there are quite a variety of investment strategies to be allocated within domestic Chinese market. And the Singapore-based digital asset platform is a very interesting one that I'm currently working on, which is a hot area that across the global market. And the digital asset is initiating a lot from Asia market anyway, and people tend to utilize the fragmented elements across the market to create different scenarios in the US, in Europe, and in wider Asia. China is somehow in a different position because of the regulatory restraint, and most of the digital asset elements are pretty much focusing on technology development and a core developing team that sits in domestic China, and then the other business alignment, transactions, trading are pretty much focusing on overseas approaches. So the last thing that I would like to talk about is the potential example on the healthcare data solution provider as well. So this is a interesting startup businesses that are focusing on machine learning and AI services across majority of domestic population's healthcare data, and that is very sensitive in a way, which we find that the hiring process is very challenging. I would like to share a bit more of that with you. Okay, so with foreign capital business setup in China, that's I think it's quite common. It was quite a hot topic in many years ago, you know, like now I think it's slightly quieting down because first of all, you know, the dollar invitations towards Chinese market is changing its taste or changing the rhythm, and people are more cautious about the, you know, introducing especially US related clients or businesses over to Chinese markets, and it's because of the political sensitivity and the wider economy restraints as well. And the COVID is definitely another element at the moment, just to make people a bit more cautious in terms of introducing dollar-backed businesses over. But European somehow is slightly more welcoming, and in the market, I would say, particularly emerging market related, One Silk Road policy welcomed regions and countries and businesses are particularly welcoming towards the market. And you can easily find a bit more straight you know, government-supported projects and services that you can actually work on. So the upside in general, I would say, you know, the businesses, startup businesses in China with foreign capital injections, the upside is it's a lot more international. The structures can be a lot more matured, and the business model can be a bit more westernized in a way, and sometimes the communication, the the company culture, it can be very international. It can be very upfront. It can be very entertaining as well, and work-life balance can be slightly better in comparison to local domestic startup businesses. And the appetite for acquiring global talents and clients are always up at the front. So foreign capitals are always easy. A lot of founders are non-Chinese national, or they have spent a lot of years in Chinese market, monitoring US or European businesses in wider scope and introducing different services towards Chinese market. So a lot of founders are actually have a very solid global client attraction capabilities. So from that perspective, there's a certain level of elements that they would maintain, they would highlight, they would sell their business in domestic Chinese market a bit better, but always with an international scope. By saying that, the startup businesses, when they're thinking about domestic strategy attraction or client attraction, it sometimes can be a bit more challenging because they need to find a way to understand their local business competitors, and they need to understand a bit more on the capital and on the regulation, on the relevant domestic services channels or potential client base that would change scope to a more RMB or regulatory protected industries as well. For example, insurance companies, insurtech companies I mentioned from my examples, that this startup business is building a very tailored healthcare service platform, aiming to serve it originally on the foreign capital insurance companies across Europe, across US backed insurance firms. But I think the service itself was actually quite lucrative if they're aiming to attract only overseas insurance companies who have Chinese market expansion plans. But in the meantime, the insurance products are quite limited for foreign companies in domestic China. So they are also designing to actually apply or trying to adopt or trying to find create a different product range for local to serve local insurance companies in the meantime, and which they find is quite difficult to understand, or it's very difficult to compete with local insurtech startups that doing similar service, and which they know hospital chains, they know domestic insurance companies very well for many years, and they know the client demands a bit more localized as well. So I've the experience of hiring for the insurtech firm that I experienced on the CEO, on the domestic China mainland sales leader, are always facing a certain level of dilemma that people are finding it's very hard to interpret the business model towards or compare or sell their strengths on the product in comparison to local similar competitors. So, but still, I think the upside is still existing. If the company is maintaining a very good revenue generating from their existing client base, they would have wider exiting plans. They will have constant capital injections from overseas investors as well. And in general, I think foreign capitals startups are easy to run B2B business rather than applying their business model towards wider population, customer-based businesses, industries. So insurtech that serves pensions, insurance fund, insurance companies, or technology companies that serves all the market or commercialized tech firms or media firms that always getting into a bit more globalizations or international exposures that is easily to manage to expand their businesses easily. And in comparison to that downside for for the foreign capital is really, I think the major gap is trying to understand a certain industry, that the regulatory restrictions, and especially nowadays that, if you look at education industry, if you look at big data, anything that related to data controls, on the core industry, on the core populations, majority of populations, data utilizations are pretty much controlled by the government-related entities. So anything that correlated to data, machine learning, resources, how foreign capital businesses or startups can actually get access to raw data, to be able to control the data and to be able to manipulate the data is going to be very challenging. And you startup businesses that need to agree on getting into those kind of market that you cannot sell those data to overseas entities. It has to be fairly isolated and independent within the Chinese domestic market. And the other thing is, how are our foreign capital business is going to compete with the local players? What do you know about them? What are the product range? What are the client base? What are the business models as well? How there has to be a lot of due diligence or pre-study before the startups to actually understand whether they need to get into the domestic market, getting into a more 2C space market in China or not. So that is more on the strategic risk side, that for a lot of foreign capital businesses to consider their strategy. And in order to help those who are looking into recruitment perspective, I would like to go into a bit more current situations in general. And I did a little bit of study about the situation, not just based on my case, but in a bit of interview of my networks and a little research on the wider discussions about the recruitment situation across fintech. Obviously, fintech in China is a big area for the next decades, and especially for when you're talking about the Bay Area setup, how the Chinese government is looking over the Hong Kong's position for the next stage. Technology is going to be a core element to make sure that Hong Kong is well engaged across the market, and to be able to create a very solid access for foreign capitals to get into Chinese market, and or for the Chinese domestic brands to go overseas easily. I think Hong Kong is changing its characters a bit more towards from financial services hub over to a technology and creative center. By saying that, I would like to talk about recruitment in terms of when business leaders are trying to set up their startup firms across Chinese mainland or Bay Areas, what you need to think about. The first recruitment element that, for a lot of business founders, I would suggest is to do a good study on location. So location on itself, it contains a lot of elements. First of all, it's most straightforward, is what type of business, depends on what type of business you are. Most of the businesses that actually have their company set up in Beijing, Bay Area, Shanghai, are pretty much those who are in high demand of capital injection in their pipelines. Because those companies or those cities are actually providing a very solid capital flow, and you can easily find investors, you can easily find other funds or corporates or large institutions who are willing to step into the tech space. And Beijing is more closer to major regulatory players. If the business is aiming more towards institutional clients or high tech guru, a very top tier sort of high-end research backed entities that a lot of company will decide to set up their office in Beijing. In general, I think Beijing is also very, very easy to find tech gurus in a way, because the university is providing solid communities and graduates, and it's easy to cultivate, it's easy to train, find people who have already trained in high quality educational background to start their career in Beijing. And the living cost in Beijing is fairly okay. I would say the living style in comparison to Shanghai, Beijing is probably going to be more domestic. The English language levels of most of my candidates based in Beijing are, I would say, are less competitive than Shanghai. And the living styles are going to be more family driven. So people tend to, who actually would prefer to stay in Beijing, are pretty much grown in the north of China, and they have a lot of families and communities and networks in Beijing, and also correlated to a lot of businesses, large corporations, banks, insurance, and major entities that who actually follow very closely with the step by government. So that is kind of the nature of Beijing, and in contrast, Shanghai is more international, more globalized, and the capital is more friendly. You will find funds that actually are pure dollar funds. You will find funds are dollar plus RMB. You will find funds that are pure RMB fund, but maybe backed by a lot of companies or high net worth individuals that who are seeking a very, very advanced technology boost. So Shanghai will be a place that you can easily find information, understanding competitors in general of the industry. The information flow is more efficient, I would say. And so if your product or if your businesses are aiming towards more general use, more wider market applications, Shanghai, more commercialized utilizations, I think Shanghai is definitely a very good city to start your business with a lot of opportunities and a lot of talents to hire as well. And I think the downside for Shanghai is considerably the competitiveness. I think most of the startup company will face with the top tier talents. It's very crucial. A lot of firms would double their prices to hire the best people, and the one thing about rich capital is that most of the company are not worrying about paying enough for the good tech-backed gurus. So this can be a bit challenging for those who actually are thinking their capital raising capabilities not strong or not sustainable enough. And another tier one area is Bay Area, that recently has been picked up very heavily. And by saying that Bay Area in general contains people, by saying that is including Hong Kong, Macau, Shenzhen, Guangzhou, and Macau I think is the most easy one at this stage, because the nature of Macau is still very entertainment driven. You'd already find a lot of tech firms that actually setting up teams in Macau at this stage. Hong Kong is different, because from the government policy, Hong Kong is making the transition into a tech center to internationalize the tech center. So that is more like a channel for Chinese creative tech businesses going abroad, going to foreign capitalizations as well. Shenzhen somehow is more like the bridging area that for a lot of domestic players to be creative enough. And Guangzhou in the market is more on the trading, on the commodity, is aiming to become a mega international trading city, and then focusing on commodity, focusing on general trading products and commodity products that will deploy from Guangzhou to overseas markets. And Shenzhen is actually a very highlighted city that been attracting a lot of tech startup businesses, SME entrepreneurs to deliver or to actually have a very good range of business setup benefits, and to be able to let them thrive within within Shenzhen. And they have a certain certain community, or what they call it is Zhuhai industrial yard. They have within the yard that they would actually have a very tax-free business cycle, and they would attract a lot of graduates to set up their businesses as well. But somehow, if the business goes around for being successful, Shenzhen is one of the city that is also challenging in real estate pricing as well. Some of the area can be more expensive than Shanghai. So if business are going into a maturing stage, sometimes they will actually sort of considering pulling back from Shenzhen and relocate to other areas of China because the housing price is not applicable for everybody. And so by saying that, a lot of tier 2 cities actually came up, getting more attentions, and the Chinese government are actually putting a lot more efforts, or the domestic government are putting a lot more efforts to attract more startup businesses in the second tier cities. And that actually, by saying this, particularly including Chengdu, Jiangsu, Zhejiang, Fujian, and Chengdu is a city I would like to highlight because as the very advanced developing southwest city, that it takes a lot of benefit from Silk Road policies. And Chengdu is also a city that with very low living cost, a very flexible living style, and it's a city that started to go really attractive by a lot of what I call it very solid self-restoration capability companies, that they don't really need a lot of capital. They can actually self-drive revenues with a solid product or solid research plans. They would, a lot of more companies like this are considering set up their teams in Chengdu. There's a couple international startup founders I know that mentioned they actually relocate their companies to Chengdu in recent years. What they find, well, there's one of the typical example is there's a chip design company that the founder is American, and he mentioned that he really it is never easy to hire people in Chengdu in the first place, but actually it's very easy to find people, good quality people, and train them from the start to the mature stage. And then the situation is most of the foreign capital companies in Chengdu, they are very competitive in terms of pay and compensation package. A lot of them are a lot of domestic players in the same industry are not be able to afford the similar type of compensation. So whenever those companies are training people up and finding a very good, building a very strong team, and those teams based in Chengdu don't intend to leave because they just enjoy the style, they just enjoy the pay, they enjoy a lot of things that the company is offering. So I think from if the startup firm or the businesses are really looking into a very solid and content environment, Chengdu is a very good option to consider. And Jiangsu and Zhejiang, on the contrast, is a different perspective because they are the areas that are surrounded a lot of Shanghai localized businesses, and also the major players in China on the e-commerce side, Alibaba, Jingdong, and basically Alibaba is the major tech startup incubators in those regions. So you will see a lot of players that actually getting into e-commerce related, and now the live e-commerce businesses are going around. So Alibaba and Douyin, TikTok is in a very serious competitive situations here. And Douyin is obviously succeeding from the technology space and the client or the market acquisition side as well. So TikTok is expanding business massively across the second-tier cities, including Chengdu. Actually, they're building a lot of business plans across the Chengdu, Chongqing area in the south as well. So Fujian, on the contrast, is on the other side, is a very interesting region that the government itself is putting a lot of efforts on attracting foreign capital businesses locally. The reason for that, it's potentially political, but also cost efficient. If people find it's very difficult to set up businesses in Shenzhen because of the cost, Fujian is always the second option that is not far from Shenzhen, and you will still have a lot of interesting projects and policy benefits and tax-free benefits within the province or the cities. So that's also can be an alternative option for some startup businesses. And on the other side, there's little extra names that I would like to mention that is also, if foreign businesses are considering to bond or get into cooperation with local government, the local government boost on policy benefits, it's very strong within Chongqing and Xi'an, and all the South Coast cities that I named down here. Any business that who have a certain level of regulatory or client or relevant business channels that within those cities are also can be an option for those smaller cities, and the living style, the cost, and the business opportunities over there are more domestic driven, more it can be, for example, Suzhou. It's very interesting place because the local government advised to set up an industrial business park that who are benefiting on the semiconducting, on the industrialized related businesses as well. So those kind of the smaller cities are constantly seeking their way to build up their expertise or industrialized professionalism communities within the startup businesses. So those are definitely worth to due diligence when you're actually interested in to step into those industries. Okay, so I'm going to talk about the next thing when we're talking about thinking about recruiting or working or selecting with my own clients or finding a way to understand my client perspective the main thing is to understand their capital interest towards the technology or fintech space. I did a little research across the KPMG's fintech research towards Chinese markets, and we're experiencing very similar things on the trend side. The capital that are feeling more secure, the foreign capital especially, that feeling more secure to get access to Chinese market is based on 2B business in general, and where they can actually easily find access to add value globally, to actually realize a bit more revenue generating from domestic markets. From a business angle, it's easy to find access to deploy dollars or to transfer dollars back to the market as well. So the 2B is still in a hot area, and especially when it goes to IPO stage for a lot of businesses that, for example, there's a fund that I used to work with in London who actually set up their Chinese desk back in 2019, and they would only invest into SaaS, 2B SaaS services companies in China that with about $1 billion ticket sizes in general, and that gives them a very clear screening processes during investment, accessing those businesses potentials, creating values by building up a strong business plans from domestic market and Chinese market and overseas market as well. So that gives them a very clear timeline of growing the business into a certain ticket size and then going to IPO or going exiting. So that is the general background or strategy for a lot of tech driven funds who are trying to get access into Chinese markets. And so digital solutions in general are very broad. Initially in China, it was all about payments, but now it's going to extend it into a wider service areas that especially towards like high quality service and life quality ideas as well. So a lot of healthcare regarded, a lot of financial management, wealth management side regarded products are growing massively, and those are the areas I think foreign capitals can easily find access or find client base in one thing. And the second thing is insurtech. It can be multiple. It doesn't really have to be in healthcare, but it can also be in finance. It can be property. It can be a lot of other things that to be able to utilize a very strong technology developing engineering team that to hire either globally or locally. This is another element that I would like to talk about in terms of hiring within those tech firms. The general hiring trend in Chinese fintech market can be split into two major perspectives. One is domestic hires, mainly to business startup businesses. It doesn't really matter. In most of cases, people are pretty much focusing on the skill set itself. And some firms are highly required to hire people that with global or international or very strong top tier academic background. That always draws over to machine learning and AI space, data managing space. A lot of computer science engineers that's studied in America, in top tier universities in America or in Europe, and they a lot of Chinese graduates like that are always seeking to come back to Chinese market. One thing is because the visa it's a big problem. So they find it's very difficult to find a job or find a company who can offer a visa solutions for graduates at this stage. Especially, I think US is in the lottery planning or lottery system. So it's not really guaranteed that you would have a job that you can actually sitting in the company for a long term. They're always an annual or 3 years lottery system, I think, and similar to UK, but UK is even more. It's not even optimistic. I think UK in general. I would always suggest my Chinese background candidates or Asia or anyone who needs visa sponsors for work to understand a bit more when you're speaking to HRs or headhunters, whether they offer visa sponsors or not, because that is a threshold for a lot of business, especially startup businesses. They tend not to offer visa. They don't have the budget, and the process is always tend to be very long and time consuming. So it's not feasible. So that pushes a lot of top talents to go back to the domestic Chinese market or Hong Kong or Singapore. So by saying that, the aim for those people who are actually going through the interview processes within domestic businesses are always split into two major sides. One is what we call it big factories, like Tencent, like ByteDance, like Alibaba, like similar type of business like Amazon and the other things as well. So the big factories are normally providing a very, very hardcore interview processes for graduates. Some of them can be 3 or 4 rounds, 4 or 5 rounds, and Alibaba will have a very hectic interview processes, from technical tests to personality tests and to what they call potentially like an IQ test as well. So there's a certain level of test structures that people need to have a lot of pre-study preparations before getting into the interview processes as well. So the selecting or the screening process for the big factories are very hardcore, and that leads to a lot of people who are not be able to get into those businesses. We'll have a lot more open window to consider local businesses as well. But global talents, I think they're sharing a lot of community and knowledge sharing, network sharing. So they would also aim to find, even for smaller startup businesses, they're always examining the employers who actually have a strong capital positions or a very strong founders who come from a very solid background. It's a lot of graduate hires actually is also an education processes that trying to understand, let the candidates understand what the business perspective is, and where they can actually have a more solid and sustainable career plan within the firm, either from product wise or from compensation wise. Where can they see the benefit and the growth in their earlier career stage? So a lot of startups, when we're working with startup big companies in China, my process is always very especially on the debriefing stage, that when we get to know our clients, when we get to understand their business a bit more, we would always going into a round of understanding their business stages, their product range, their client focusing, where are they going to go next, whether their hirings are actually very target driven in terms of developing new market, new client base, or it's going to be a very management or operational driven character that trying to maintain the business quality. It's going to be in a very detailed discussion, and we tend to work with businesses that have fairly strong capital positions at this stage. We tend not to work with startups that is just basically backed by a major corporates in China, or they're more like the corporate incubators, and they're like the babies of the corporates. We tend to find that sometimes those kind of businesses hiring is leaving a lot of questions in terms of culture, in terms of product range. It can be quite limited as well. So so by the nature of my client base, I think we tend to work with a lot of VC backed tech firms at this stage. And by saying that, AI and machine learning recruitment hiring, it's also very, very fascinating based on my experience, because the global hire that we're able to speak to top tier talents across the market internationally, and where we find the difficult side for those to attract global Chinese talents to go back to focusing on this market is I think that the challenge comes from two sides. One is the pay, very straightforward, how startup companies can compensate well enough for a MIT PhD, basically, who are actually running their own projects, data solutions with the American companies, where they can get really solid funding. But when they are actually considering going back to Chinese market, their resources will be limited, and the company's nature will be not lucrative enough at the earlier stage. How we can find candidates to build a very entrepreneurial mindset with the company, grow with the company, share long-term benefits with the company is the key to sell this position, basically. And on the other side of the challenge is on the product range or the data, so-called data quality. A lot of AI and machine learning are pretty much rely on a very solid, large number of data collecting, whether this company are able to have access to a very solid data pool in domestic Chinese market, in their target market. That's one question. And what kind of service providers they can use, and what kind of quality product they can provide. And are those quality products going to be isolated in China, or they can share that from knowledge base from the global perspective as well? A lot of people will have a more global view on how to read this type of market, how to read machine learning technology, and they would like to get blended into the global trend rather than being isolated to the Chinese market itself. So that's where it brings conflict to some sensitive industries, like for example, like there's a particular portfolio company I work with that they work on the healthcare data solutions, and the company is basically headquartered outside of China, and that they're trying to get access into Chinese market. But before they agree to do that, they have to find government people, they have to find insurance, they have to find hospitals, they have to find local regulators to actually agreed on a piece of paper saying, okay, we're signing up this agreement. All the business we generate from China, the data we're gonna collect and operate in China, it's gonna be limited in Chinese market and not allowed to go abroad. So that, those kind of healthcare related or very highly sensitive, user experience data, user data, it can be very, very tightly located into Chinese domestic market. So any businesses who wants to get a data related businesses into Chinese market, they have to do a lot of research, pre-research, or a lot of discussion and a lot of meetings, a lot of due diligence to understand what the local market look like. Where are the potential risks? Where are the regulation constraints? Where are potentially be the next stage if the data is able to get access to domestic market, or to link, what level of data can be linked over to international market. So those kind of research needs to be done before considering setting up those businesses, or when you blend it into your international business model, would that be the same situation, or do you need to change it, or kind of build a more domestic business model to apply for your market acquisition? So that is how I feel the hiring processes within those high tech firms are facing, that they're learning the market mostly throughout the hiring process with us as well, because they need to speak to local top tier management people, data manipulators, to understand what they really want, where the gap is, and how they can bridging it. So that is the general trend. And there's also, I listed a couple topics that on the digital asset side I would like to mention for the next period, or for the next decades, that for business startups, or like startup founders, or anyone who wants to sort of get in touch into digital asset space, that to look into those areas as well. So the currency, the crypto side, one thing, the crypto side, mainly dealing with the trading, dealing with the capital deployment, and by saying that, most of the service providers, most of the transaction related startup businesses who are deeply dived into blockchain technology or crypto digital asset technology are pretty much focusing on setting up businesses in Hong Kong or outside of China. Even unless they're purely research driven or data service provider, they can probably do a little bit of a domestic business setup in China mainland. The regulation basically on the band is not transaction or not tradable, and anything that is to do with research, engineering, developing, it's all fine. So on the other topic, on the other topic is the CDBC side that I would like to mention, not highlightly, but something that is worth to keep an eye out, because the Chinese government is seeking for building their own CDBC environment at the moment, and in the next 10 to 15 years, I think the scope, it can be very localized, and the information, the technology is also going to be very discrete, but fast developing. By saying that, all the related service providers in this area, either from CDBC or from digital asset or from blockchain itself, it would be a very interesting market to look out for, and to also potentially to find top tier talent from as well. If anyone who are seeking for this kind of topic, we can actually find another time to go into it a bit deeper. Okay, I'm gonna move on to the next topic. Is when we're looking into the regulation side on the recruitment, that is it's pretty much focusing on the core government related or government monitored in recent years. Not talking about the educational side that everybody knows now. It's on the technology space, data space, that I mentioned from my previous example on the healthcare data protection side. Healthcare is one of the biggest topic for Chinese government, especially the COVID actually paced it up about trying to let the centralized or the government people understand, from a more philosophy for psychology, from more kind of mental health perspective. All those data is in a very early stage within Chinese market. So those kind of businesses are fastly growing, and the Chinese government is trying to build a very solid information or service pool across all those very niche and very raw and undeveloped topic. But it can be very, very interesting. It can be very supportive by the regulation as well. So those kind of things are I think, for business founders or entrepreneurs, that to consider is whether you're picking up a very, very niche market that have limited expansion plans or support, or are you picking something that potentially will have a very broad plans that can actually utilize the foreign capital resources and your data manipulative tools? Or is there anything that you can actually utilize your existing or overseas resources to help the Chinese domestic market thrive in those areas? And those things, the Chinese people are actually very, very open-armed to listen and talk about. And saying that there's something that I mentioned, the Fintech innovation regulation is always improving. It's still not done yet, and it's fast improving. Chinese government is constantly studying the Fintech regulations, and from the technology side, from custodian side, from all the other possibilities, how to help businesses to actually get access, utilizing RMBs, utilizing foreign capital transactions as well. So those things are constantly in discussion. If it's completely fintech related businesses that they need to understand, or they need to bond with the regulators constantly to understand what the Chinese market is trying to do in the next stage, to what type of business, that help you to be able to steering your strategy, fast enough, or in time, because the regulation can be a bit like 1 to 2 days, and things got completely cut off. It's just like education. So the risk, like regulatory risk in the SME businesses in China, a lot of them are facing from this area, this risk. You need to find a team or a leaders that should always be able to track what the government's regulation towards your business angle, towards your channels, towards your wider client base as well. And the if the fintech firm or the startups actually are bonded well with the local regulatory elements, then you need to focusing on setting up your businesses with Beijing, Shanghai, all those kind of relevant regions. There's a kind of a local business. I think the reason the cities I mentioned here is pretty much tailored into kind of domestic market favorability. So a lot of like Xiong'an, Guangzhou, Hangzhou, I think those cities are pretty much more for domestic market who wants to actually have startup businesses to benefit with local markets. And Beijing, Shanghai, Shenzhen, as I mentioned, those are pretty much more adaptive into global and finding the bridge to apply both local and domestic and international regulations, and to be able to kind of build an international exposure towards product as well. There's a little areas that I listed here based on the study, and it's pretty much covered what I said about the high-tech space: artificial intelligence, cloud computing, blockchain, mobile finance apps, and data privacy protection. So data privacy protection is more towards cybersecurity side, and I think that area is not really being highlighted enough yet in the market. Not even just not just China, but I think in overall of the market, it's still not highlighted enough. So those can be a very interesting area to be watch out for. Like this. What could it be the next? What are the technology? What are the regulations on the cybersecurity, data security side, and how to provide a very strong and a data controlled, centralized data protection system within China and outside of China. So these topics can be also very interesting to discuss and for another session. And okay, in general, I would like to give you a little bit of idea about how fintech firms structures look like in general. And by saying that is it's fairly simple in a way, but it also kind of can be quite diversified by the nature of the business as well. So normally on the C levels, we tend to get involved into major hires from CEO to COO to CTO, CMO, etc. And the title doesn't really mean anything for a lot of cases, because it matters is what matters the most is what this person can do. Sometimes the BD people can also be called marketing officers, or they do client expansion, but also sometimes they do marketing as well. So we need to find out what the founders are really looking into. And but in general, there's similar to everywhere, every company. There's front desk, there's mid office, there's a back office. So by saying that, the front desk is mainly people who are attracting capitals, attracting clients, deploying product to the market, finding customers, and then you will have the supportive, what they call a mid office, potentially that doing product design and product management, understanding the client demands and doing client service, for the post-sales stage as well. And marketing and sometimes goes into other ways. You have to maintain your brand or launching new product, so you need a lot of help from marketing team as well. Admin is fairly, it's always essential, but sometimes people are not really paying enough attention on admin people hiring. But high quality admins is very efficient, I have to say. Sometimes what we find is working with HRs who doesn't really understand the business itself, or it doesn't really understand the strategy of the business. It brings a lot of gaps when you're using recruiters trying to tell a good story about your firm, selling a good perspective of your firm. if the HR couldn't deliver it, the recruiter are always finding it's very hard to sell. And this is why we tend to work with business leaders directly rather than working with HRs. And for some high quality companies, it's very straightforward. Good leaderships, in my experience, are always willing to share more ideas and be more transparent, telling about their gaps, difficulties, and where, you know, the idea is to work with the recruiters who can help them speak into a good perspective, a good target, good development plan of the firm. So, you know, a good business leader is going to be very, very from characteristic side, from credibility side, is going to be very approachable and very attractive to talents. So by saying that, normally we tend to work with business leaders who are willing to share and always bond with us, and you know, analyzing or understanding what they're facing, what kind of strengths, what kind of weaknesses they're experiencing, where are the gaps, where are the challenges. So, you know, it in the end, they becomes our friends because of that, because we can think thoroughly, because we are speaking to the market on a daily basis, trying to understand what other businesses are doing, how they are conquering all the other similar difficulties, and where, you know, where we can help people, where we can find people, actually help them bridging all those gaps. So culture, on the other side, I think this is an interesting topic, because most of the foreign capital team, or, you know, a lot of founders are, if they're not domestic Chinese, we can easily sense their business model, the way that they work, are very, very entrepreneurial driven, and people tend to sit in the position, sit in their own seat, but understand the business wider, better. And they always share ideas, always talk about the things. As I mentioned, good businesses will always identify the problem and try to find solutions together. And that is the typical culture of a westernized or a foreign startup businesses. And the work-life balance, I would say, is pretty much, it's okay. It's not very hardcore in comparison. I think for a lot of domestic Chinese firms, they are worse. And but somehow I think the Western national founders are fairly creating a very entrepreneurial, self-motivated, very highly autonomous environment that people normally would drive their own motivations to work overtimes or to work long hours to help the founder find solutions. And that's where I find it's very attractive for some of the clients we work for. They, you know, the leaders' ego it's very down on the ground. It's very flat structured. People are trying to, you know, look into the same target and try to, you know, participate together, and that's how I find it's different from domestic players. A lot of Chinese founders are putting a very high ego in there. They're a little bit of a heroic mindset in there, because they feel that they're the person who actually initiate ideas. They are the people who find capitals. They actually controls a lot of resources in their own hand, and the business structure in domestic companies, it can be very, the information, it can be very diversified. The digestion of information internally, sometimes it can be quite inefficient within domestic players. And the pay structure on the other side, I think it's we can talk about it for the next page that I would like to highlight. So the pay structures of fintech startup are generally sort of split into base, bonus, and equity. And for major C-level and director level above, they will easily get an equity allocated. But in different companies, the perspective are slightly different. But in general, I think the Chinese domestic fintech firms are always tend to pay higher on base and lower on bonus and equity shares. And because I think that people tend to give a bit more guaranteed push on base salaries. It doesn't really matter on your performance. If your sales leaders, your sales revenues are it can be adjustable, but your base salary, if we really think you can do this, you will be guaranteed with a base salary that with all your hard working overtime, and you will feel satisfied enough, happy enough that you have a solid pay coming into your house to feed your family every month. So Chinese founders tend to do that a lot. And however, on the other side is the foreign capital players are more on the providing more incentive structures on the equity and the bonus side, and the business growth or share of interest or share of benefits for everybody in the firm. They tend to create that culture across the firm from junior levels as well, and especially for the front desk people, that they would encourage people to go further beyond of their, to exceed their P&L targets as well, and to bounce ideas, to create new markets, and create new products, and those will also be very incentive on the product team, developing team, to get a good reward. So that's you can tell from the figures. It's basically a market research recently done by a few local advisor houses on the fintech startup businesses pay structure, which aligns to what my experience across the C-levels, especially, pretty much very accurate, and it won't really go over exceeding. But I think if you look at RMB 1 to 3 million, I think the 3 million end are pretty much offered by the domestic players, and then you can actually picturing that they, whoever has 3 million in their pocket on base salaries, then their expectations on bonus and equity can be limited. That's how you read those figures. And in general, insurtech industries at this stage are across all the other fintech industries are pretty much on the lower pay range. And I think the main reason is because the insurance companies, their revenues and their applications towards the market is not on a very high transaction, a very cash flow driven type of business services. So that is correlated to their capital holds or their revenue generating target in general. It's going to be more towards risk reserve and revenue generating on stabilized perspective, where you don't really see a lot of big growth into those markets. They're looking into long-term stable service plans, high quality plans for clients. And I also listed a few sort of areas that from the last page of 2021 fintech hiring demand. It's quite straightforward, actually. The product management side I would like to highlight is because we come across a lot of product management topic in the market, not just in China, but a lot of clients realize with a lot of high tech products or startup teams that it's easy to find people who can do product, and it's easy to find people who can sell it, but who actually, the salespeople sometimes don't have a full a strong knowledge to understand how to manage a project, how to interpreting clients' demands and translating that into product design solutions. So product management talent is the people who actually can understand both, who can have this kind of commercialized quality, able to speak to the market, and also understanding the product, the fundamental of the product, the development process of the product, how to do the coding, how to do programming, and is that realistic, or how to educate clients to adjust on the product range as well. Those product management people are in a very, very, a good product manager, sometimes it can be equivalent to a very good sales manager. So that level of talents that we found has been missing to a lot of fast advanced fintech and technology market. And another point I would like to highlight is the information cybersecurity side. Of course, those areas I think Chinese government are putting a lot of efforts on. A lot of research backed startups would be highly welcome to consider building their products in Chinese market at this stage. Maybe not utilizing them on real business use, but research driven platforms who are aiming to provide solutions for domestic market will be pretty much welcomed. And that's in general, hiring developers, hiring programmers, where we found that on the programmer or engine DevOps, on the computer science talents perspective, the local hires are fairly okay, but to attract global candidates, as I mentioned before, a lot of American graduates, Chinese expats that is waiting for graduation this year, or especially that I spoke to a few graduates recently in the US. They're still pretty much highlighting the career search plan from domestic US first. And normally the trend is, if they're not being able to secure a position, they will consider to go back to Chinese market. I think that is that the reason for that, I think mainly is because they have a very strong community that come from sort of computer science Chinese students community, and they talk about this a lot. They do a lot of internal referral to graduate schemes, and they found that a lot of strong big brand name, even the US ones in China, are actually working very long hours, longer than the ones in American. So the living style, the lifestyle, the work ethic is another topic to think about when people here in China are trying to attract global candidates to come back. But local talents is fairly easy because it's still very under management. You can easy to do campus hiring, recruiting, and in reference and internal referral is always very, very straightforward. So I don't really have much to add on those space, but happy to listen to any questions or any opinions that you can just message me on. And I think that is the general view of what I can provide for my current scope within the market on the recruitment side, and I hope that's helpful. Hopefully we can have a further dialogue onto other topics as well, and I believe that people Sinofy will share my contact details if anyone are seeking for a one-to-one discussion in the next stage. Thank you so much. Cheers.